Let's welcome in Pankaj Sharma. He's an independent market analyst joining us in our Mumbai studios. Welcome to NDTV Profit, Pankaj. What do you make of the market moves? We've seen the markets consolidating all of last week. We have a lot of triggers now behind us, the budget, the RBI policy, and so forth. Going ahead, do you see markets touching new highs? Do you think there's room for caution?
Yeah, I think good morning, everyone. My sense is that whatever has happened in CY 2017 so far in last 5 to 6 weeks is a kind of positive surprise in terms of how the market has performed. Of course, when we were entering the year and around the end of December, it was not looking very, very likely that we would have this kind of performance what we have seen in last 5 to 6 weeks. So that's a good thing. There are a lot of negatives which have happened, and that makes it even more incredible, because when we see that the news flow which is coming from US after Trump has taken over, and also the budget was more or less fine, but it was not something which you can say that it was a really path-breaking budget or something very, very unique or very special. So overall in that context, I think the market has been performing really, really well. When you put this in the background and see that how things would look like for next 3 to 4 weeks, I think there is no big event which is in the pipeline as such. So probably people would try to find reasons in terms of, let's say, for example, what could happen on politics, what could be the outcome of state assembly elections. So people would look for data points which would probably be needed to form a definite view on the direction the market is going to take. But unfortunately, I don't think there is really much in terms of broad indicators. Even if you look at the RBI, the stance on rate cuts, it's more or less done that RBI has changed the stance from accommodative to neutral kind of policy. So in terms of macro data points, there is really not much to, and that's why I think that it's probably a time for next 3 to 2 weeks to see some kind of consolidation in the market. We are unlikely to see the same kind of performance what we have seen in last 4 to 6 weeks in the market as such.
Right. So you spoke about the state elections. How is the market looking at these elections? What is the market factoring in? We have states like Punjab, Uttar Pradesh, Goa going to the polls now. And how important will global factors be? What is happening in the US? Donald Trump's the White House has said a tax reform is coming through, a big tax reform. Do you think global cues will be as significant? Because so far we have seen markets are getting a lot of support by domestic funds, and even though FII, they're not buying in a big way, the markets have risen very high. How would you compare global developments versus the state election results?
See, I think on the state elections first, I think that they are certainly very, very important, because when we have the results on 11th of March, it would be very, very clear that how people have voted either in favor of BJP or Mr. Modi, or they are against the government. And in that context, if you see that compared to other states, I'm not definitely trying to say that outcome in Goa or Punjab or other states like Uttarakhand is not important, but the key here is Uttar Pradesh is almost 60-70% of the current scenario where 5 assembly elections are going on. So in that situation, picture is still very, very unclear. There is a very strong likelihood that we might not see a single party emerging as being in a situation to form the government, and that is something which is be very, very bad as such. But even worse could be that if BJP doesn't emerge as the single largest party in UP, that is something which will definitely not be liked by the market. And I see that there could be a downside there, because after the Samajwadi Party and Congress alliance, it looks more likely that compared to BJP, it's possible that they might do better. And if they emerge as that combination which has 180, 185 seats, and they are able to form the government, then definitely that market will not be like that poll outcome as such. So, of course, state assembly elections are very important, and I think that anything which is not going to be positive for BJP is going to be bad for markets. The second thing on global factors, when we see that we have seen that there was a lot of skepticism about whether the poll and campaign rhetoric of Trump would be different versus his actions once he becomes president. But we have seen that he is trying his best to implement whatever he has promised. You can argue that whether it's good or bad, but overall you see that there is some kind of alignment between what he was saying and what he is doing now. And in that situation, I think overall, if you see that US economy is still on a strong footing, it's able to sustain the shocks which are coming from the new president. But overall, I don't think it's something which would be important that much for Indian markets in near term, because we have seen in last 2 or 3 months that FIs have not been a big supporter of Indian markets, and they have been on the side of sellers. And instead, the market has been doing a reasonable performance. It's doing quite okay. So in that situation, I really don't think that anything else or anything worse from what Trump has been doing in first 2-3 weeks could really impact the market that negatively. Unless there is a big event which we have not factored in or we are not forecasting, we believe that the global factors are not going to be that very important in next 4 to 6 weeks for Indian markets as such.
All right. What would you then do for the next 4 to 6 weeks till we get the final results? The markets aren't correcting much from these levels. They've been in a tight range. Do you play stocks? Do you look at particular sectors? What would you do in the interim?
See, I think, again, it's a situation where I don't say that it's a new struggle for investors, but what we have seen in last even 18 to 24 months, that it has not been a market where you can just pick a sector and that choice would deliver returns for you. Though at this point, I think that there are a couple of sectors which are looking slightly better. Maybe if you see the consumer space, I think that the pain of demonetization is there, but I think going forward in next 6 to 9 months, things would probably get better for them. And valuation compared to the historical averages are still okay. They are not very, very expensive. Similarly, on banking, we have seen that at least there is some improvement in the situation. We are not saying that we are out of the woods completely, but at least in terms of these two sectors, we are seeing that there is some resemblance of sanity which is going to return in next 6 to 9 months, and that is going to be helpful. But otherwise, if you see that other major sectors like maybe IT or pharma, we are really not in a situation where we can take a definite call, especially in the case of IT. So it's a market where you have to be very, very careful. I believe that the opportunity in the large cap space is really very, very limited. So you have to go down a bit and see that what are the options you have in the mid cap space, what are the options you have in the probably the smaller companies. And that is something which probably give you a better return compared to what you are going to see in some of the large caps. And the performance of large caps, you see that that is why perhaps the reason that market has been at the same level where they were maybe 24 months back or 30 months back. We have not really seen much of a change in the broad levels of the market, and that's why you are seeing that probably opportunities could be more in the mid-cap space and the smaller companies.
Right. Do you think Q3 numbers being better than estimates is one of the reasons why flows are now looking stable?
Yeah, I agree, Pankaj. I think that this is something which was definitely better than expected. As I said, that one of the very important reason why market has been able to give a decent return in first 5 to 6 weeks of this year is linked to that. There were a lot of fear. There were a lot of bad news that was getting factored in towards the end of December and the first week of even January, that results are going to be very, very bad and they are going to be disastrous, especially in the sectors where demonetization would be a very key negative factor for companies. But compared to that, I think things are not that bad. In fact, in some of the cases, things are probably coming back. Maybe after a not so great showing in December for auto sales, January has largely been fine for Maruti, and of course there is impact on two-wheelers and three-wheelers, but overall things have not been that bad from Q3 results perspective as such.
Right. If I just look at the FII flows, and briefly that you mentioned that, FII have not been that great in terms of, buyers. But in the last 7-8 days, do you see some stability over there? 300, 400, 500 crores on a daily basis. Is there a left out feeling with FIIs as well?
Yeah, it's always a chicken and egg situation, because nobody, whether it's a domestic investor or international investor, wants to be left out whenever market is doing well. And when people realize that there was a lot of negativity around the domestic situation, and that probably led to almost 8 to 10 weeks of continuous outflows from foreign institutional investors. But when they see that the market is still holding back, and now the domestic part is very, very strong. So domestic investors are in a situation where they can really support the market. And when you see that happening, when you see that 3Q results are not that bad, so probably FIs are also thinking that, okay, India was bad, but it's not that bad that we continue to ignore the market forever. And that is something which I think has led to a slight shift in the sentiment, slight change in the view FIs would be taking, and that could be perhaps one of the reasons why we would see some kind of consolidation in next 4 to 6 weeks going forward.
Right. Idea results came out. Results were, of course, quite poor than what the street was estimating. But do you expect that if Idea and Vodafone merger, which the talks are going around, if that goes through, there could be a significant change in the industry dynamics?
See, I think this is not the case. Unfortunately, my view is that till the time I see more visibility and clarity on what the end game for Jio is, I would not really be very, very keen to take a call on this space. Irrespective of what happens on Idea and Vodafone merger, I think that there would be still 3 very large and important players. Airtel on its own is big enough. Then Vodafone, Idea, combined entity would be a very, very strong and large player. But both these guys have to compete with Reliance Jio. And what we have seen in the case of Jio especially, despite spending so much on capex and despite putting in so much of money in the business by Reliance Industries, I don't think they are in a hurry to make money from the telecom business in short term. They would, as you have seen, that the inaugural offers which they have made, where the data plans were free till 31st of December, that has been extended till 31st of March. And I don't think it's unlikely that it might get extended further. So currently they are in a phase where they have to build the subscriber base. And then probably another 3 months, another 6 months of a loss-making business is not going to hurt them that much. They probably would have factored that in. So for the industry, I don't think things are going to change much unless I see that, okay, now Jio is done with whatever it had to do in terms of freebies, and now it will move on to do something more sensible.
Right. In terms of Jio, now, of course, the street is expecting, or a lot of analysts are expecting that from April you may start to see revenues, and that's the time when you will come to know how Jio is performing. But whenever they start collecting tariffs, you think from free they will go to a slightly discounted model and then probably start charging full? Will that be the way with something which street is not factoring in now?
Yeah, I think that's very, very likely, because I think before that, one very important thing which probably I would highlight is that when you compare the service of Reliance Jio today versus what happened, let's say, 11 to 12 years back or 13 years back with Reliance Communication, I think there is a big change. The service of Reliance Jio is not that bad. It's perhaps comparable in many ways to other large players like maybe Vodafone, Airtel and Idea, especially in the case of data. Now, when you see that there are people who would be fine and happy with the service, but still, when they are not paying anything, asking them to pay market tariffs is going to be very, very difficult. So what you said is very, very likely that probably from a completely free model to a market-linked tariff model, it will probably require a bit of transition period, and that transition period might mean that you would have some kind of discounted model for the subscribers and the consumers that might be offered by Reliance Jio, and that is again going to be very, very bad for incumbents and the other players in the market.
Right, let's talk about some other sectors. So, BHEL has done well after results, Suzlon has done well after results. You've been tracking these names for really long. Do you think this is, happening in because a lot of flows are coming into domestic markets and ideas are reducing? That's why these companies which are trading at least significantly off their day's high is something which domestic investors would look at?
Yeah, I think that's a very important reason for some of these companies to do well. So especially when you see that what is happening in the core industry for these two companies, I really don't think there is any big shift or any big change in last 6 months or so. Because when you look at the kind of tariffs which we are seeing today in solar, the kind of power demand and the kind of capacity which we have today, I really don't think that there is going to be a great time for either the wind turbine manufacturers or the project developers who are putting in capacities on conventional coal or gas-based capacities or plants. So I believe that fundamentally things are not really that great or looking up for many of these companies. But what you said was perfectly valid, that at times when you see that optically these companies look very, very cheap, and when you are struggling to find ideas, especially in the large cap space, you would probably say that, okay, this is something which has not done anything great in last 12 months or 6 months, so let me just take a look at it. And even a couple of guys are getting interested in that kind of stock. It means a significant move up. And these are the stocks where really there was no interest. So as I said, that even a small bit of interest from institutional investors who is willing to put in some decent sized money in these names probably would make sure that these stocks would start performing better. So when you look at some of these related sectors like maybe a power grid or maybe even NTPC or Torrent Power, many of these names, they've done very, very well. So probably people are struggling to find ideas in this infrastructure power cap goods space, and that's why they thought that maybe BHEL Suzlon would be a better bet.